It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Things are going to turn around early next year. We're going to start seeing some relief for average households in terms of their ability to continue with their lifestyle and the affordability side of things.
And that is Sarina Gibbon on the Real Estate Breakfast this morning, your largest real estate podcast right across Australia, as we talk property from Mackay to Adelaide and everything in between, and streaming right now on your favourite platforms, including iHeartRadio and Apple Podcasts. Well, the weekend, yes, it is back as we chase real estate dreams around Australia. Reminds me of the Tom Petty song from the 1980s, Running Down a Dream. And when it comes to dreaming and imagining, there is no bigger subject, I put it to you, that occupies our minds when we're wanting to buy our first home, our second home. It could be home number 5. The feeling doesn't leave us, does it? It is still the same. And don't forget to do your due diligence this weekend. Even if the messaging from the agent is, oh, look, there's a lot of interest in this property. You better be quick. Take the time, be thorough, and don't let some of these messages from agents dilute you being absolutely comfortable and satisfied that everything lines up on that property. Due diligence. We say it all the time. Well, it is a Saturday and October the 18th. We're going to go across the ditch right now and catch up with Sarina Gibbon in Auckland from the Auckland Property Investors Association. Now, this is just to find out what is happening in the New Zealand property market. And good morning to you, Sarina. Welcome to the Real Estate Breakfast this morning. Yes, there seems to be a lot happening. And first off, I just want to start with what the Reserve Bank is doing there in New Zealand, because last week it knocked off 50 basis points and the cash rate at the moment is now 2.5%. So, as I say, lots going on.
Lots going on. Good morning. Thank you so much for having me. Yes, so a week ago, our Reserve Bank had knocked down the OCR by 50 basis points, and that is signaling that there's strong moves to really stimulate the market after several sluggish years after COVID. So what is happening off the back of that is we're already seeing domestically the major banks are aggressively slashing their card rates.
Yeah, we'll get to that in just a moment. I do want to pick up on Auckland's average home value. That fell minus 2.5% in the September quarter to around 1.193 million. That is trailing year-on-year declines. They say that cities like Wellington, Hamilton and Nelson also saw downward pressure. And the QV House Price Index, that shows the national average value, that dropped around 1.1% in the quarter to the end of September, placing the national average at just over $900,000. So what is the economy feeling like at the moment? Because we do see reports that there's some negative sentiment, and the government, I think, has been tracking downward as well.
Yes, definitely. And what we're seeing is, and you're seeing the flip side of it over in Australia with an influx of more Kiwis into your marketplace and creating demand and having an effect on your domestic market. What we're certainly seeing in New Zealand is a general lack of business confidence off the back of a technical and then a real recession in New Zealand after COVID. The government is working hard at turning the ship around in time for the 2026 election. And I was just at the Bloomberg event last week where the housing minister talked very much about the forecasts that she is seeing at the moment is looking like sometime next year things are going to turn around. But at the moment, the New Zealand public is just being asked to steady the course and understand that this is still going to be a really tough year, but there's going to be green shoots coming up in 26.
Yeah, very interesting that young professionals are leaving New Zealand, which is stripping away housing demand at the moment. Seems to be one-way traffic, and that is people leaving New Zealand. Not too many Aussies going to New Zealand at the moment.
Yes, and that is going to result in property investors in New Zealand having to recalibrate their expectation of the market. And when you couple that with a very sluggish economy where people are losing their jobs, not getting pay rises that they were previously accustomed to, and struggling with inflation since COVID, you're seeing a lot of disappointing balance sheets for these rental properties. And that could very well explain why investors are increasingly looking across the ditch to Australia to look at how they're going to use the Aussie market to make the math still math.
Yeah, it's got to sort of line up, doesn't it, at the end of the day? Just quickly having a look at those loan-to-value ratios. Now, the rules are set to ease from the 1st of December in New Zealand. Banks will be allowed to issue a greater share of mortgages to buyers with deposits under 20%. The change is designed to improve access to credit, especially for first-home buyers. However, many economists think that the relaxation won't immediately spark a major price surge. We are finding out all about what is happening in New Zealand this morning with Sarina Gibbon. When we come back, we're going to drill down a little bit more on the state of the rental return in New Zealand and just how aggressive are the banks operating in the mortgage space. We'll do that after this.
From the emotion of property, the economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on the market. Stay informed with us and know your property.
And right now it is time for another property tip. Recently we were talking to Nicole Jacobs in Melbourne. She is back, and good morning to you, Nicole. You've got another property tip for us this morning.
Indeed, my property tip at the moment is that when buying a property, please look at the overlay surrounding that property and any approvals for development. Really important if you're, looking at your dream home for the next 20 years, understanding what could be built right next door or at the back of that property.
And just as important is have a look at some of the upcoming rezoning, because that could literally add hundreds of thousands of dollars to your property.
Absolutely. You need to know what's going to be built or what could be built. That's really important because it could affect whether you purchase that property or not.
You're listening to the Saturday Property Market Update.
And it is a real estate Saturday. Yes, the weekend is here. Sarina Gibbon is with us too. She is from the Auckland Property Investors Association, trying to get a temperature gauge of just what is happening in New Zealand at the moment. Just in terms of the association there, Sarina, how many numbers have you got? And I guess you're doing that sort of sentiment temperature all the time with your members.
Yes, absolutely. And what we have discovered in our recent nationwide survey, so we surveyed not just our members, but investors up and down the country, is that 80% of property investors tell us that their confidence in the rental market going forward is really going to depend on the outcome of the next election, which is due to take place in October 26. So that is telling me that at the moment, as much as possible, the conservative and sensible actors are going to hold the course and not make a decision until they have more clarity on who more likely than not is going to take government after the next election.
Yeah, it's interesting, the government, because they came in at a time when something needed to change. I think there was a small honeymoon period, but they've never really sort of got traction going. And having a look at one of the latest results coming, the political results, it's tightened up quite quickly. And the opposition, they are certainly in with a real chance next year.
The numbers definitely suggest so. What I would be more interested in would be the numbers coming out in the first and second quarter of next year, because from a business point of view, the expectation is very much that things are going to turn around early next year. We're going to start seeing some relief for average households in terms of their ability to continue with their lifestyle and the affordability side of things. And you know this, when people are finding things a little bit hard to fill up the kitchen table, they're not going to give the government at the time a good scorecard. So all eyes on 26, and we'll just see what happens.
That loan to value ratio that I talked about, which is set to change on December the 1st, I guess investors would be looking forward to that change, the smaller deposit required.
Yeah, I'm not sure if it's going to be Christmas early, to be honest, because again, alongside with loan to value ratio, we also have debt to income restrictions in New Zealand. So that's going to continue to put a lid on aggressive borrowing. I think what is really interesting and exciting for investors that's happening behind the scenes is not so much the interest rate, but that the serviceability terms criteria for banks when they're assessing the serviceability ability for affording loans is being relaxed quite significantly. So that is happening in the background, and that is pushing a lot of loan applications across the line.
I see that according to Cotality, the analysis of New Zealand's home values are now estimated to be minus 17.3% below their peak. The September quarter saw a 0.7% drop. Yeah, so it's kind of heading in one direction, but where it's probably starting to move somewhat is the aggressive nature. I know that you touched on this of the banks, quite aggressive operating in the mortgage space. We've got that happening in Australia as well, but they're right now quite aggressive in NZ.
Yes, quite aggressive. And across the marketplace, banks are doing different things to entice property investors back onto their books. So some banks I know have approached us to talk about 10-year interest-free product that's coming up in the market. And then we're just going back to 10 years or so ago when that was very much the norm. Now, in terms of the depreciation of housing value, the context is very much having to be mindful that what we're comparing to the historical data, some of that was artificial because they were just grossly inflated during the COVID years. So we've got to be really careful around how we're benchmarking the figures in terms of reading into whether we should be confident going forward.
What about the state of the rental return in New Zealand? I know that you touched on that earlier, but what's the sort of forecast around that for the next 12 months?
The forecast is being favorably for tenants and not as much for landlords. New Zealand rent has always been pegged to wage growth. And when the economy is sluggish and people are not maximizing their earning potential, you're just not going to be driving that rental market from a yield point of view. Increasingly, we're seeing centres such as Wellington really being the epicenter of our economic pullback for the last 2 years. Those rental figures are looking very, very tough for property investors to remain in that market.
Sarina, you're a wealth of information there in Auckland, New Zealand. Thank you for coming on to the Real Estate Breakfast this morning. Really appreciate that. Enjoy your weekend.
Thank you. Thank you for having me. It's been fun.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
The property market has been really hot, especially Brisbane and Sunny Coast as well, like Bly Bly and Maroochydore have been performing really well.
And Varsha, why don't we step over which parts of Brisbane do you think right now is showing the strongest growth and stability?
Again, it's the same sort of suburbs that have been performing really well in Brisbane, which is Campbell, New Farm, Weevil Heights. But I am seeing amazing growth in Mango Hill, and the next door suburbs are also sort of coming into place as well. People who can't afford to buy now in Mango Hill can buy in other areas in the next door suburbs as well. So that's again opening up those opportunities for them. When it comes to Gold Coast, it's Burleigh Head, Southport and Mermaid Beach that those suburbs have been performing really, really well.
We connect you to the best real estate information across Australia. The Real Estate Podcast.